Hello everyone and welcome to my channel. So today we're going to do a trade review of EURJPY and GBPJPY. So first of all, on Sunday when we were doing the weekly outlook, EURJPY we wanted to see price go up, and we were targeting this buy side liquidity as our draw of liquidity. So on Sunday when we did the weekly outlook, our key areas was this fair value gap here. We had marked this fair value gap and we were anticipating to tap this fair value gap, and then we continue with the bullish price action. But instead, let's just look at this. So this is Monday. Instead, on Monday, we inverted this fair value gap. We violated it. And also Tuesday, we also violated this fair value gap. So I did not like this price action. For those people who are in the Telegram group, remember I told you guys that I'm not interested anymore on as of Wednesday with this bullish price action in EURJPY because we had violated our key area points. But then on Thursday, this is what we got. Price actually came back and closed above this inverted fair value gap. So when I saw this on Friday, I remember I also sent in the group. I told you guys I'm now interested in bullish to see EURJPY now going bullish because we have this fair value gap formed here. So now I'm going to use GBPJPY for as an example to check the trade setup that we got on Friday, and then we will still come back to EURJPY because GBPJPY and EURJPY are positively correlated. So let's look at GBPJPY. Of course, it's the same. Whatever analysis we've done at EURJPY is the same analysis we are also going to look at when it comes to GBPJPY. So first of all, let's come on Friday because that is the day that we got our trade set up for GBPJPY. Friday starts here. So already we had marked this 4-hour fair value gap, and this 4-hour fair value gap is what I had marked as a higher time frame PDRA because you can see from here we made a high, we retraced, and then we made a higher high. So I was watching this 4-hour fair value gap and expecting that it would support price to continue going further up. So let's move now to the lower time frame because of course the first thing is once price tags our higher time frame PDRA, we now move to the lower time frame. Lower time frame for 4 hour is 15 minutes. So this is a 15 minutes time frame, and in the 15 minutes time frame, as you can see, during London session, price was inside our 4-hour fair value gap. And normally, whenever we want to confirm that price is being supported in our higher time frame PDRA, we look for our entry criteria. And what is it? Well, first of all, need to see a liquidity sweep, number one. Once we get a liquidity sweep, we also need to see a market structure shift, because market structure shift will confirm for us that now the price is willing to reverse. Because you can see from here, when price is retracing to a higher time frame PDRA, this price action here is bearish. So which means when we're changing from this bearish price action to bullish, to start bullish price action, that is a reversal. And market structure shift is one of the things that we look for to confirm reversals. If you look at London, let's just still go back to London. We can still consider this liquidity sweep here. We swept this low. We also took out all these lows here. Let me move to the 5 minutes so that you can see. If you move to the 5 minutes, as you can see during London, taking out these lows, this is still considered a liquidity sweep. So you can consider that as a liquidity sweep. So that's it. And then you can say we can have market structure shift happening here, because remember, for market structure shift to happen, okay, so we have that high. We would expect to see a lower low and then we close above this high, but there are days when you don't get that lower low. You get this high and then you get a low that is high, and then now we break this high. So this is still a market structure shift. You can still consider this a market structure shift. Then this here will be a mitigation block. Difference between a mitigation block and a breaker block. A breaker block will be formed where you have a lower low. If we had a lower low and then we come break that swing high, that would have been a breaker block. but because this is a low that is high, this becomes a mitigation block. So still during New York session, you would have gotten an entry here on this mitigation block, and this would have been a continuation trade. Continuation trade, this is where our entry, liquidity sweeps, and market structure shift happen before your trading session, so that during your trading session, you use any PD array now for entry and take advantage of that move up. So this is one way that we would have taken advantage of it. That was entry number one. Another entry that was possible was after we got this liquidity sweep here, then we closed above this high. You would have still gotten a second entry here on this fair value gap here. And this is the one I took. I also sent this in the group. So this is where I entered the trade and then took 50 pips and you're done with the trade. So your stop loss would have been below here. And anytime you enter trades, whenever you want to take, whenever you're looking for take profits, always use session liquidities. Session highs, session lows, those are regions that you can use for take profits. So that was GBPJPY. So let's go look at EURJPY. Friday starts here. So we had marked this for our fair value gap. So this for our fair value gap is our higher time frame PDRA in this case. So we expect that price will tap this for our fair value gap, get support, and then we bounce up. So of course, once price tags our higher time frame PDRA, we move to the lower time frame. Lower time frame for 4 hours is 15 minutes. So this is what happened. During London, we got more of like a consolidation. Then when New York session opened, what did we get? We got a liquidity sweep, which is a good thing. So we got a liquidity sweep. After getting a liquidity sweep, here is our market structure shift. This is where market structure shift happened. And then we had so many PDRAs that you could have used for entry here. We have an order block here. This here is an order block. Apart from the order block, we also have a fair value gap here. All these are possible PDRAs that you would have used for entry. But as you can see in this case, on Friday, EURJPY, we really did not have much movement because you would target your TP maybe on Asia high here. But instead, price didn't move much. This is all we got on Friday. So if you got this doesn't necessarily mean that your trading strategy is wrong or your analysis is wrong. It's just that the markets can do whatever it wants to do. So on this day, EURJPY did not have the strength to move, but as you can see, GBPJPY, our price was able to give us that setup. So GBPJPY on Friday was the better pair to trade